Hey there, property investors. Want to learn about DSCR loans and short-term rental properties in just 30 seconds? Tip 1. DSCR, or Debt Service Coverage Ratio, is a key metric lenders use to evaluate your loan application. It compares your property's net operating income to its debt obligations. Aim for a DSCR of 1.25 or higher to increase your chances of approval. Tip 2. Short-term rental properties can generate higher returns than traditional rentals. Platforms like Airbnb and VRBO make it easy to market your property and attract guests. Just be sure to check local regulations and plan for vacancy. Tip 3. When financing a short-term rental property, consider a DSCR loan. These loans focus on the property's income potential rather than your personal finances. You're now equipped with the basics of DSCR loans and short-term rental properties. Don't forget to like, share, and subscribe for more.